Good morning, traders, and welcome to Daily Call today, Friday, the 8th of September. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's happened overnight. Well, locally in Australia, even though retail sales and trade balance both came in under the forecast, it was the weakening of the US dollar that was the driving force yesterday in the markets. And right now, the Aussie dollar is looking for fresh highs within striking distance, and currently we are trading at 80.60 at the moment. In the US, well, we had unemployment claims come in worse than expected at 298,000 claims. Crude oil inventories at 4.6 million. Look, in the US, the chances of a rate hike in December have all of a sudden fallen dramatically. It's due to the hurricane situation, and basically the next few weeks of data will be tainted by the storm, and the swift recovery in activity will be needed to prompt a rate increase or to increase that chance of rates for December. So as a consequence, US dollar has taken a bit of a hit. It's pretty much weakened against most of the majors all around. Okay, in Europe, we had the interest rate decision remained unchanged as expected at 0%. But the question was, why did the euro have such a strong day, reaching highs of 120.60? Well, the ECB did not reduce asset purchases in their monetary policy statement, but Mr. Mario Draghi did promise that changes to their quantitative easing program are coming, and he made it very clear that it's not a question of if, but a question of when they would start tapering asset purchases. As a result, the euro soared, climbed significantly, and now we are pushing towards higher highs. It's a classic case of stay on the trend, guys, and we've been talking about this one for a long time. We've been on this trend for quite a significant amount of time. Until it changes, just keep staying on it. All right, it's time for our chart of the day. I've actually found us two charts today, so there's quite a lot of options. So these are the two that I've picked. The first one is Kiwi dollar on a 4-hour time frame. This chart was a chart of the day, I think last week, when we were on these setups over here, and as a consequence the market did drive down. We've pushed up again and we've produced another set of inside candles on the same resistance level. So pending orders are set. Should we break the bottom of the candle, we are in and ready to go. So that's Kiwi dollar on a 4-hour time frame. The other chart of the day that I have found is it's a CAD yen on a daily time frame, and this one is a classic double top. This is what a normal double top looks like. There is nothing in between. I often get a lot of questions, is this a double top, is this not a double top? It's basically straight down, back straight up to the same level. We have produced an inside candle, so again your pending orders are set. Should we break the bottom, we are in. Should we break the top of that inside candle, well then you need to go back and cancel your order out. Okay, so there you have it. That's the chart of the day. Our second one, that's CAD yen on a daily time frame. Alright, let's have a look at what's happening in the final session of the week. Not a whole deal, but we have at 6:30 this evening, we have Governor Lowe will be speaking locally, and also from the UK we have manufacturing production numbers. At 10:30 from Canada, we have employment change and unemployment rate. Of course, the Canadian dollar has been soaring. It's been storming through everything in its way. Let's have a look at this piece of data and see how it reflects recent activity. So there you have it. That's for all CAD traders. Guys, as always, please feel free to contact us. If you have any questions, follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, have a fantastic trading day. Have a great weekend, and I'll talk to you on Monday for the Daily Call. Bye for now.